Welcome to Futures Now. I'm Jackie DeAngelis. We are coming to you live from the commodity desk at CNBC Global Headquarters. Here's what's coming up on today's show. Crude oil getting crushed today, but one of our traders says now's the time to buy the commodity. He's going to give us that trade later in the show. Plus, Bitcoin plunging about 19% this month and hovering near its year-to-date lows. But Fundstrat's Robert Sloimer says he's got one chart that proves Bitcoin's bottom is in. He's going to tell us what's got him so excited about the cryptocurrency. But let's begin first with the markets. The Dow and the S&P falling today, with the Nasdaq moving between gains and losses after President Trump imposed steel and aluminum tariffs on some of the EU's closest trading allies. Jim Uriel and Jeff Kilberg, they're the traders today. Jim, let's go ahead and start with you. What do you make of today's news and how it's impacting the markets?
Okay, up until this point, I thought that all the tariff talk was just bluster to gain leverage in negotiations. Today, it kind of seems a little more real than I had anticipated. And this is not something that's making me a bear by any means. I still think the fundamental story is still very positive. But this definitely has me concerned in the near term.
Jeff?
Well, I think that's certainly front and center, but there's a lot of different moving parts. We're still digesting a technical move we saw last Friday. It's just been interesting to see Deutsche Bank is in the headlines today. You know, we talk about all these big banks too big to fail 10 years after the crisis. So there's a lot of stories being digested by the market right now, but the fact that it's staying above 2,700 from the S&P E-mini perspective, that's really encouraging.
Okay, well, the Trump tariffs may be behind today's sell-off, but Citi's top market watcher doesn't see them as the biggest market risk. Tobias Levkovich is the firm's chief U.S. equity strategist. Welcome, Tobias. Always great to see you.
Nice to be here, Jackie.
Let's first start with what you think is the immediate risk to the market right now.
Well, certainly we saw the last couple of days the kind of big shifts in Italy and the concerns of what it could do in terms of bond yields. But more importantly, is there some fracture in the euro potentially out there with a whole bunch of ramifications. Again, this is probably not the likely scenario at the moment, but it's certainly something the market's got very concerned about. And you saw bond yields react to safe haven, kind of traditional investment vehicles, U.S. Treasuries, the dollar, all of them, getting a real bid. And the subsequent impact to that was also, as yields fell, investors started dumping some cyclicals and buying some defensive stocks.
All right. Now, you think your previous prediction was that there'd be a market slowdown. You continue to stand by that. But explain to me what the difference is between your view on a slowdown and what some people are saying could be a deeper correction for this market.
So I think the issue was where we got to in January. Markets had run too far, too fast. People gotten too excited. Our panic euphoria model had moved into euphoria, suggesting 70% chance of a market pullback. Those are disconcerting. Today, sentiment's fairly mixed. We don't have quite the same vulnerabilities. Now, again, if you tell me Europe does really fracture, we have a much bigger problem. But that's kind of geopolitical risks akin to what if there's a war with Iran. So we don't predict those. If they occur, we have to react and we have to hedge portfolios. But with regard to the kind of underlying economic demand in the U.S., that's still pretty strong and should generate earnings that support markets and get you not a huge market gain this year, but maybe some strugglings here through the summer, and then 5-6% up, and we close 2,800 for the year. If you look at 12-month time horizon, you probably get up to the high 2,800s, and that you're still talking about 7-8% total market return in terms of appreciation. Add another 1-2% on dividend yield. These are respectable results. They're just not fantastic double-digit gains, which at a certain degree we kind of all want. We're all greedy, but at the same token, it's not the kind of normal pattern we see in markets.
Tobias, how many rate hikes do you see from the Fed this year?
The city's looking for 3, but certainly if the economy is stronger, we're as data dependent as the Fed is, and that a fourth could occur.
Jim, question for Tobias?
Tobias, I need you to talk me off the ledge here on these tariff things. My belief was always, up until this point, that all the tough talk was only about gaining leverage in negotiations, and that eventually President Trump and our friend Larry wanted to achieve a level and fair playing field. Do you believe that Donald Trump is too much of a protectionist? Do you believe these tariffs are for real?
So I think they're for real for the moment, but again, these are executive decrees that could be removed, 2 weeks from now, for all we know. And again, I do think this idea of gaining leverage is very much the case, and sometimes they put markers down to try to essentially, stress the point. So I think we can't read too much into it. There's a lot of almost internal administration fights around this. There are some free traders, there are some non-free traders in there, and it almost seems like negotiating with themselves sometimes, not necessarily negotiating with their trading partners. So, I'm like you. I'm not thrilled about what we've seen. I think protectionism is a concern, but I think you'd have to have a much wider degree of protectionism than just looking at steel and aluminum.
Jeff?
Hey, Tobias, thanks so much for being here. Really agree with a lot of your perspective. But my question is for all our viewers out there, what are your top plays? What are the sectors that you really want in this type of environment?
So we're actually trying to take advantage of some of the slowdown or the pullback, if you like, in 10-year yields, which penalized a certain number of areas, like some industrial selectively, financials, energy. We think those are both areas that we want to take advantage of recent pullbacks. In the financials, we still think bond yields are heading higher. Wage inflation is coming. Doing a number of pieces of analysis we do. And by the next 6 months, we should see higher yields, which then benefit financials. With energy, it's kind of, I was down in Texas yesterday, for example. It's really, really hard for the Permian shale drillers to get product from the hole to you and I as consumers. Pipelines are backed up and bottlenecked. That'll probably take at least 9 months, maybe 12 months to fix. So in the interim, we probably have a decent bid on oil prices here. And that people have kind of overreacted, if you like, to some sense that the Saudis and the Russians may increase production to offset what might be lost in Iran and in Venezuela.
Tobias, great to see you. Thank you.
Thank you.
We'll talk to you again soon. Jim, let's get straight to you. You're trading the S&P for us, buying, selling. What are we doing?
I think I'm not a bear, but I think we retrace go back to some of the lows we visited earlier in the week.
Right,
if it trades 27... Thank you, Tobias. If it trades 27.08 in the June E-minis, I think that's a spot to get short with a target of 26.90. That's still above yesterday's low. A stop placed above 27.18, I think, would be reasonable for that strategy.
What do you think, Jeff?
I think you got to ring the bell here. I mean, he's never come out with a bearish conversation. He's not a bear, but I like the fact that he's approaching this back and fill. We saw a lot of technical damage on Tuesday, and that was one of the things we've been talking about all week here, Jimmy, is that you saw that bounce off that level. Maybe the FANG stocks led, maybe they didn't. We can argue about that for the rest of the show, but the point is there's a technical back and fill, so I like the way he's approaching it. More importantly, I like this stop-in technique. Right now, we're trading 27.11, so there's no trade right now until we go down 3 handles lower. Because remember, the high of the day was 27.28.
Jackie, I'll just throw one more thing in too. I believe it's a back and forth trade until we get it above 27.50. As soon as we get it above there, I think you can ring. Then I think you can ring the bell,
which I would crush you in
bigger
ping pong.
Move. Oh, please! It wouldn't even be close. But anyway.
All right, let's get the risk reward, gentlemen, on this trade. Jim is selling S&P futures 27.08. He's targeting a move down to 26.90. Each point $50, risking 500 to make 900 on the trade. Okay, let's move on to crude oil, down for a 6th session in 7. Jeff, you guys think, you said it on the air today, you both think the price is going higher from here. Yesterday, some buyers got into this trade, but selling again today. Are you sure that we're going to move higher?
Well, my buying level is 60.70. That's a great question. 67 even is where I want to be a buyer. I'm looking for a $2.5 move up to 69.50. But I am being mindful of all these technical levels, so I have a stop at 65.75, just $1.25 lower. But to your question, Jackie, we did see a lot of people book profits, right? And right now, today, it's interesting. Crude oil is kind of checking in and out of the correlation of the stock market. Today, it's correlated. So we are seeing some sellers. But at the end of the day, we just saw Assad come out and warn the U.S. So this rhetoric or the geopolitical tension. I couldn't say geopolitical on air for some reason, but that was the word I was trying to say. That's not abating, and that's my point. So that, therefore, we'll keep these
so wouldn't the price be up today?
These higher lows. Well, it should, but it's all about reaction, Jackie. It's interesting. The U.S. dollar's been a driver, but at the same time, it's been more emotional of a trade as the volatility has come back. And let's remember, just about 5 trading sessions, we were trading $74.
And if there's nothing unusual about it consolidating near the lows after that big a move that it had.
It needed to.
Yeah, and it needed to. And I think that from a technical standpoint, it's behaved like I thought it would. It took a long time for it to break, but it never could really break out of this range to the upside. It traded right down to support. I think it's going back up to 70 as well. The one thing I disagree with on Jeff's trade is I'd put my stop up a little higher. I think if it breaks 66, forget about it. I'm no longer bullish on.
You are a bit of an innie drawers on your stops. But the last thing I want to add on here, a couple sprinkles on the cupcake, Jackie, is that this OPEC, this dream of OPEC increasing production to fill the gap for Venezuela and Iran, not happening. OPEC is sitting there high-fiving each other due to the fact that the Aramco IPO is coming. They are not going to even consider it. They may chirp it once in a while, but they are not even going to consider it.
I think they'd love $80 oil, frankly.
No doubt about it.
Well, yeah, I mean, that's what a lot of people are saying. They're actually saying that it's more politically motivated and sort of a pat back to the U.S. saying, you know, the Saudis saying, thank you for getting out of the Iranian nuclear deal. We know that we're going into midterm elections. We know prices are up and gas prices are up, so we're going to try to help you out here. What do you make of that argument, Jeff?
That's right.
What are you suggesting?
No, I think it's all part of the narrative, right? And I think a lot of people didn't believe it. And let's go back to when crude oil was trading under $40. When they first initially came out, OPEC and non-OPEC members said they were going to curb production. It's never going to work. They're going to cheat on each other. But now the narrative that you just laid out, I think it's all part of this movement, as we do see the energy sector healing has helped the U.S. economy. Make no mistake about that.
Yeah, but yes, to think that perhaps there could be conspiratorial things that control the price of crude, I don't think that's far-fetched at all.
No, I mean, right? That's how OPEC's run the ship for a long time.
That's what it does.
They call it the oil cartel for a reason, right?
Yes.
Right.
You're Italians know about cartels, right?
Let's go ahead and get the risk reward on this trade. Jeff buying crude at 67, targeting a move to 69.50. Each point $100, risking 12.50 to make 2,500 on this one. Let's go ahead and transition to Bitcoin, falling 19% in the past month and hovering near year-to-date lows. Our next guest, however, says the bottom may be in here. Robert Sloimer, he's the head of technical research at Fundstrat Global Advisors. He joins us now on the phone. Robert, great to have you.
Hey, thanks, Jackie. Great to be here.
All right, so let's dig into this because your argument is a little tough to sell here. You've got a chart that says Bitcoin has begun this bottoming process, and I mean, some would argue, well, it keeps setting new bottoms.
Well, that's fair enough. I mean, if we really take a look at the chart, I think there's a couple things worth noting. First of all, there's a trend line, or at least a support line, that goes all the way back to the fourth quarter of last year, touches the low in February, and again touches the low in April. And just this week, Bitcoin's managed to bounce off that level around 7,000. So that's certainly the first step in a bottoming process, to see some sort of consolidation or basing taking hold. If we look at the momentum indicators, they're fairly simplistic, but they do tend to track these multi-week shifts in cryptocurrency. So that RSI indicator in the bottom of the chart is very oversold and starting to bottom. So that's really the part of that bottoming phase taking hold. Now, the next thing that has to happen is to see Bitcoin actually rally through the downtrend. And we use the 15-day moving average. It's very simplistic, but it's a pretty good proxy across most markets, most securities as a proxy for trend. That's around, call it 7,800. That'll be the next hurdle for it to get through. But overall, when we step back, we see the first phase starting to happen. We think Bitcoin's starting to bottom off some very key support around 7,000, and we think it's going to start a recovery process here. We'll see if it does or not, but that's our call. We think the setup is very attractive here. If you're short, we think you should be very careful and reducing your short exposure. And I think if you're looking to be long, this is where you start adding to your long exposure.
All right. The naysayers regarding Bitcoin would say, listen, there's a lot more regulation to come, and central banks simply are not going to allow another currency to sort of, mix and flood the marketplace. And that would indicate that prices really should go lower here. What would you say to that?
Well, those are certainly good fundamental arguments. I can't really argue with those. However, I do think that there's an awful lot of bad news priced into Bitcoin. I'm not sure it's going to replace other fiat currencies as a currency, but as a store of value, it certainly looks interesting. But I think the real key point is when you look at all these tokens, whether it's the alts or Bitcoin, they trade very well off of technicals. And so from a risk-reward standpoint, they're very volatile. It's not for everybody, obviously. It's not for widows and orphans. Should be a small percentage of every portfolio. But at current levels, if you're a tactical trader, I think this is a terrific entry point from a risk-reward standpoint. Potentially 30% upside can get you back to the recent highs around 9,800.
All right, Jim, jump in.
Robert, do you think there's a relationship between Bitcoin and gold? Has Bitcoin taken away some of gold's former role as being a store of value, particularly in difficult times?
Boy, it's a great question. There certainly is a lot of debate around that. I'm not sure we can draw any quantitative analysis, and I certainly can't see it from a technical standpoint. The patterns are very different. It's not as though one is benefiting at the expense of others. But that's certainly a debate out there, and I do think that incrementally people are using Bitcoin as a store of value.
Jeff?
Hey, Robert, thanks for coming on. Really appreciate you providing the perspective on Bitcoin. And I agree with your forecast. I am bullish on cryptocurrency, specifically Bitcoin, for the rest of 2018. But however, I got to play the devil advocate, the other side. As we're in this bottoming phase you're speaking about, what is the capitulation component? What is that ironclad floor level that you see Bitcoin? You're going to see all the institutions, all the folks come out and buy. What is that capitulation number?
Boy, I'm not sure. I think we may have seen that in February on that 6,500 level. I think that was certainly a high volume low. And to be very honest about it, Jim, we don't know if all the selling is done. We can only really look at the pattern that's developing right here, right now. Gauge it or judge it from a technical standpoint. Is the risk reward favorable? I'd rather be long here with stops very close to the lows that we just put in than waiting for the entire trend to reverse for Bitcoin to get above 10,000, where my downside or my risk reward becomes a lot less attractive. So again, technically and trading it from a technical standpoint, I think the risk reward's really appealing here.
All right, Robert, thank you so much. Great to talk to you today.
Thanks, guys.
We'll talk to you soon. Trading Bitcoin futures for us, Jim. You have the trade. So what is it? Levels?
Yes. Yes, and I'm no long-term lover of Bitcoin. I'm not even sure it's going to fit in, 10 years down the road. But I do like the chart as well. And if it trades 77.50, which is a couple $100 from where it is right now, to me that'll look like the current downtrend is broken. I think that's a spot to get long with a target of 85.50 on the upside. If subsequently it trades below 72.50, that's where I'd place my stop. Like I said, every price dictates short-term trades much more than the fundamentals do. I still think the fundamentals are lined up against Bitcoin long-term, but that doesn't mean it can't have significant price pops in the meantime.
Jeff, that seems to be, at least, while Robert's view was that longer-term Bitcoin is going to go higher, and there may be some volatility, that you will see these short-term pops higher. So can you get behind this trade?
I like this trade. I can, and the reason I like it, again, it's a buy-in stop, right? So in order for him to get long, we have to trade up a couple $100 to his point. And remember, this is the CBOE contract, so it's one coin, not the CME, which is 5 coin. But it's important to see that momentum kind of move to his trade. However, if Robert's right and we're still in a phase, that bottoming phase, it's just going to chop around that, and test that 72.50. He's not in the trade. So I think it's important to understand the way he's playing momentum.
There's one thing, Jackie, is that a lot of people don't understand on Twitter. A lot of the ways I trade and look at markets is to see some momentum first.
Twitter.
They maybe just don't like me on Twitter. Is that to stop in on strength over a long position and stop short on weakness. And that, to me, is that you see the momentum going first, and then you jump on in instead of trying to pick bottoms.
And then one more reason, Jackie, where I like the short term at this level here, it's attractive. You're seeing a lot of institutions, they've been trying to implement their investment statement policies to buy cryptocurrency, specifically Bitcoin. Well, now it's all of a sudden we're almost in Q3, so a lot of those initiatives that were Q4 of 2017, they're happening now. So more and more institutions are able to get allocations or exposure to cryptocurrencies, and they're only long.
The last thing, too, is if it goes above 8,000, this might be one of the kind of trades we modify on Twitter, because it could have a lot more legs to the upside. I could easily see it bounce up to 9,950. Once it begins to get that momentum. So this is one that's going to cause you to be nimble, in my opinion.
And that's a shameless plug to follow him on Twitter.
Shameless plug. Follow me on Twitter.
All right. Let's get the risk reward on this one. Jim buying the CBOE Bitcoin future, 77.50. He's targeting a move up to 85.50. Each contract, 7,750. So risking 500 to make 800 on this trade. All right, my thanks to Jim and Jeff, and to you out there for tuning in. Meantime, if you missed anything, everything's on demand, all at the website, featuresnow.cnbc.com. And for the latest headlines and a sneak peek of what's coming up on the next show, be sure to sign up for our newsletter at cnbc.com/featuresnow email. You can find the link to that and real-time trade updates on our Twitter account at CNBC Futures Now is the handle there. Otherwise, we'll see you for our next live broadcast. It'll be next Tuesday at 1 p.m. Eastern right here, featuresnow.cnbc.com. See you then.